Hello there, this is James and you're watching OneRoyal. It's live. In today's program, Trump tries a little bit of reverse parking. As well as that, the mighty greenback seems to be getting punched all over the place. And plus, we talk about one sector which seems to be doing pretty well because of all the chaos and drama with tariffs. But before we get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should it be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So, yeah, it does seem that Trump may be attempting to do a little bit of reverse parking or parallel parking, potentially, in reference to the tariffs on imported cars, because he made a hint that he is, or the administration in particular, is looking into possible exemptions on soon-to-come tariffs on auto parts. In his words, he said this: "We're looking to help some car companies. They may need a little bit of time to move their production to the US." Now, obviously, this does sort of make sense, because obviously one of the main driving factors, obviously, between, for Trump's tariffs or tariff war or campaign tariff, is to bring back manufacturing back to the US. That's one of his main aims. Now, obviously, this doesn't happen overnight. It can't happen overnight. So clearly, obviously, he is sort of thinking that maybe giving a little bit of time to US car manufacturers, which still obviously needs parts which come from Mexico and Canada. However, in general, the whole car industry in general is taking this as a bit of a boost. And we have seen even European car manufacturers have a very good day today, with the likes of BMW up by 3%, Volkswagen up by 2%, which we'll have a look at, obviously, in a minute. But, again, it's one of these things where suddenly he will come out and say something, and the administration will say one thing, and then they say something else, and it can get quite confusing. This is why they're letting the car stocks and the market in general, and we'll look at it in a second, is, looks set to maybe have the third day of gains after the horrors of the previous trading week. It's still a bit wobbly. The main reason as well, despite Trump saying he might be light on tariffs or do exceptions on tariffs and car parts, he's also saying he's opening an investigation into semiconductors, pharmaceuticals, which means, again, there may be tariffs on these as well. But the market is, for now, I've said this all before, let's face it, we've had weeks of drama ever since Liberation Day. We've had nothing but this sort of drama. So the market is taking it a little bit with a pinch of salt, or maybe just simply getting used to it. But anyway, it is still very wobbly. But let's have a quick look at how the market is open, because it's been open now for 40 minutes. So let's have a quick look at where the market is. This is obviously the Nasdaq. Again, slightly up today, not massively. But again, if we look at it, could this be a third day of gains? Because, potential gains, because obviously gain would close lower on the day. But, we are slightly more optimistic. Same with the S&P 500 as well, being slightly higher up. So we can tell this was the volatility index as well, that maybe the market is calming down a little bit. Perhaps they've got used to this sort of talk, these sort of things, and maybe it's calming down a bit, or maybe it's generally seeing hope that there is leg room in these tariffs, etc., things of this nature. And if we, like I say, we have a quick look at obviously B&W, like I say, B&W's up 3.6% currently. So again, there is hope that these car tariffs, and Volkswagen's the same, again up 2.68% as well. I want to move on to a different subject as well. Again, because even though, okay, here's the thing. Here's the thing that we need to bear in mind. Every time there is a slight ray of hope, slight like, guys, guess what? This is things are looking really, really good. And he's lightening up. Every time he's doing that, then reality kicks in. Reality does kick in. That we are still got a number of things against us, i.e., for example, a trade war, which is heating up. Trade war is heating up. You know, China, for example, today, okay, has called on all Chinese airlines to halt further Boeing jet purchases. Now, this is not new, but this could be very damaging for Boeing, obviously. And again, it's another card being played in this trade war. You know, as we can see at the moment, it's lost ground anyway to Airbus, but it's going to lose more ground potentially. As you can see, all the top airlines, obviously, the pink, if I bring it up a bit closer so it's easier to see, the pink is obviously Boeing and the black color is obviously Airbus. So as you can see, there is a majority are Airbuses. But Boeing was hoping to gain some ground on this. So obviously, again, but this is another card. This is another fact of the matter is that we are still in a full-blown trade war as it stands. So despite we might get some relief on car tariffs, despite the fact we might get some relief on electronic products, which we're not sure because we get mixed messages, the reality is there is still a trade war and it's getting nasty going on between China and the United States. And don't forget, this is another reason why it can be quite damaging for Boeing, is that China is forecasted to make up roughly 20% of global aircraft demand in the coming decades. So that market is expected to grow considerably. There's something else I want to talk about as well, because there's one sector, surprisingly, one sector, which with all the volatility, all the craziness we have seen over the last couple of weeks, there is one sector which looks like is benefiting. And that is the banking sector, because Bank of America reports first quarter profit increases and revenue drive by robust trading results. BOE, or Bank of America, you know, for trading equities, revenue from trading equities was up by 17% to 2.2 billion. And that's the highest ever for one quarter. Citigroup, their revenue sales, and they announced their earnings today, and trading revenues rose 12% from a year ago to 9 billion. It's also the highest first quarter for equity trading they've ever experienced. So if we can even look at all the top of the big banks, they've seen a big increase in their trading revenue, which is understandable because of all the volatility which has been experienced over the last couple of weeks. So, like I say, the one sector which has enjoyed the tariff ride so far, is obviously the big investment banks. You're doing, their earnings are doing better than expected. One thing I will add on this, though, despite the fact that their earnings is better and they are performing a lot better, one concern which has been raised both by the CEO of Goldman Sachs and the CEO of Bank of America is they have said they are approaching an economy or a marketplace which is uncertain. So though they are indeed saying that, yes, we've had a good first quarter, better than expected, especially with trading revenue, they do see uncertainty or clouds of uncertainty on the horizon. So they have said that. So for now, they're enjoying it, but they are saying there is dangers potentially afoot. Right, next, something else I want to talk about. I want to do a currency. And that's indeed, yes, a currency update, because I have to ask this question. Is the US dollar losing its crown? Because it's not having a good time of it with all this drama. Okay, and we're not the only ones seeing it. A lot of people are seeing it. In fact, fund managers are seeing it. In fact, Bank of America's they do a fund manager survey like every month, and they captured the views and positions of global fund managers. Okay, and there's quite a bit gone in this survey. A lot of it coming out is they're feeling that a lot of investors are going to start moving away from US stocks into European stocks. In fact, we discussed this several weeks ago on another broadcast. And like I say, as we can see, we've seen over a couple of weeks, indeed, the European stocks have outperformed US stocks or US indices in particular. But let's focus on the dollar, because this dollar is quite interesting. It's because 61% of the fund managers in this survey expect the US dollar to depreciate in the next 12 months. Now, I saw silly chat today with some analysts and things like that saying, oh, yeah, the dollar is going to lose its reserve currency status, which is no chance that's ever going to happen. But there is clear signs, okay, that the market is moving away from the dollar. They're looking at obviously safe havens, the Swiss franc being one of them, the Japanese yen being another. But there's another one which seems to be doing well, which is not a safe haven, will never be known as a safe haven, and that's the euro dollar. The euro is currently trading at a 3-year high against the US dollar. The British pound, okay, again, not a safe haven in any way, again, just showing general dollar weakness, is trading at a 6-month high. The dollar yen, like I say, is trading at a 15th month low. So anyway, let's have a quick look at the market, at the currencies in particular. That's what we want to look at. Now, like I said, the euro dollar, okay, is currently trading, again, like I say, near around a 3-year high, currently trading 1.12, slightly down for the day. But we've had, 1, 2, 3 good days of gains. And like I say, we even popped above the 1.14 level. Again, like I say, we started seeing a change in the euro about a couple of weeks ago, when obviously Germany announced more spending on infrastructure and defense spending, and basically Europe started doing that, so they started giving the single currency a boost. The other difference, of course, as well with the euro is obviously ECB did indeed cut rates, which is giving them, the euro traders or euro bulls the idea that, okay, there's going to be growth in the eurozone, whereas the Fed obviously is sitting on their hands. So that's another boost. And don't forget, we do have an ECB interest rate decision happening on Thursday this week, which we'll talk about again in at the moment. Same with the British pound, US dollar. Again, trading, like I say, at 132. It did. Unemployment today, by the way, for the UK came in at 4.4, same as previous, and that's expected. There's something, no change there. But again, a weaker US dollar. And we look at the dollar yen, 42. Remember, we started talking about the dollar yen. We did this in a few videos ago, and we discussed the potential, the dollar weakening against the yen, and the yen being favored over the dollar as a safe haven. It was trading at 149. So clearly, we've been seeing that over the last couple of broadcasts and conversations that we've had. It would be one of my broadcasts, of course, if I did bring up the little yellow shiny metal, currently trading, still hovering around all-time highs, $3,223. So yes, the safe haven status of the yellow metal is still very much in play currently. Anyway, got a busy week. I know we don't really win. It's funny because I remember when I'm doing these sort of live broadcasts for quite a while. I'm talking about the market quite a while, and it's often talking about economic data, but obviously at the moment it's the T word, which is obviously the word tariffs. But there is some key economic data to come. US retail sales. It'd be interesting to see the consumer rushing out to buy stuff now before things get more expensive, or they're starting to get scared. We have Bank of Canada interest rate decision tomorrow. Inflation, CPI, Canadian CPI came in softer today. So there is anticipation that they're going to likely to reduce interest rates. ECB interest rate decision as well on Thursday, as I already mentioned. Again, they're expected to cut interest rates by 1/4 point. But I think more important than the interest rate decision, I think it's the press conference. What Langard has to say about the current climate with trade, tariffs, etc. So that's going to prove to be more interesting, I think. Don't forget, this is indeed a live show, so you can talk to me anytime you wish, or say hello if you like, or share with me your opinion. Let me know what you think. Let me know what you think about the current climate. I mean, is this thing with Trump, is it a complete reverse? Is he trying to parallel park? Or again, is it just one of those things that he said, but then he's going to double down later? And again, we don't know. We've never known something quite like it, to be open. Okay, don't forget, if you're watching me on YouTube and you like this sort of thing, by all means, subscribe if you like. Hit the notification button so you know next time we're going live. If you like this sort of thing, you like this sort of content, and you put up with me, by all means, give me one of these. It's nice to know that you like what I do. And same if you're watching me on Twitter. Of course, if you like me on Twitter, by all means, give me a little heart. It's nice to know that you like what we do. As well as that, of course, I do notice that a lot of people go back, watch the recordings, okay? And, and again, if you think of a comment and you want to ask me something, or you have an opinion, if you're watching the recording, you put it in the comments below. I will see the comments, and I will reply next time I go live on air, which of course I go live every day around this sort of time to talk about the market and talk about tomorrow and the topics. So, bear that in mind. Okay, if there is no questions, not a problem. It leads me to say, don't forget, these little videos are for educational purposes only. In no way whatsoever should it be taken as financial advice. I always suggest you do your research, do your due diligence, and of course, the risks at hand before entering any trade. Till next time, every single one of you, trade safe.